All right, guys, so I'm going to show you how we caught a 418% return, turning $113 into $585 per contract based on my alert and just pure analysis, okay? So you can see my alert was sent out yesterday right there, but open QQQ 11:15 380 calls. But this was the reasoning behind it, okay? I said that based on my QQQ cash count, I could only count 3 waves up off of this 369.50 low, okay? We have wave 1, 2, and then I subdivided it into smaller degree in red, so I still could not count wave 5 up. The decline was also very corrective in nature. You could see that everything was in waves of 3s. What does that mean? If you are familiar with EWAVE, you know that that is a corrective structure, not impulsive, suggesting higher prices to come, okay? On top of that, we had NASDAQ, which was yet to take liquidity above 15,720, which was my next draw. You could see that if you look historically speaking, right, since the reversal low, we can see that they have been sweeping old lows. So as long as that continues to hold true, guys, they're going to keep on taking out these highs, with our price targets being 15,720 and 15,850, right, which is the high in September. Okay, so this was my draw, okay? I also noted that the substructure was in 3s, right? This is not impulsive, right? So if you are familiar with EWAVE, you know that this is not impulsive, suggesting higher prices to come, okay? So I sent my alert out for a huge return, and I just, these are all tweets from my private Twitter feed. So I also said that VIX, I can only count 3 waves down on VIX, right? Suggesting that VIX was consolidating for wave 4, suggesting that we still needed VIX to get crushed. Well, what does that mean? That means higher prices to come on the market, okay? So with that being said, I'm going to go into a chart, show you guys what I mean, but this was exactly how we caught a monstrous winner, okay? Let's go into the chart, QQQ. You can see here, guys, look at the cash session, right? I also tweeted this out for free to my public Twitter followers. We have wave 1, 2, and then you can subdivide 1, 2, 3, 4, 5, okay? There we had wave 4, okay? We had wave 4 and then the massive gap up just as we were expecting, okay? Right, extended wave 5. Let's go into a chart, guys. Let's see what I was talking about when I say that we've been taking out old highs. You can see this high was taken out, this high, okay? 380.83 was my next draw, okay? We're taking out this high, ultimately looking for 388. That was exactly why I had a bullish bias going into CPI, because if you look left, guys, the directional order flow has never shifted bearish yet, right? Higher high, higher low, higher high, higher low, okay? Consolidation for wave 4, right? So until that structure shifts bearish, it's important that you keep in mind of the higher time frames because they are ultimately king. If we go on to VIX as well, right? This was what gave me conviction to get long. We have wave 1, 2, and then wave 3. I talked about that triangle on VIX, right? For wave 4, A, B, C, D, E. This called for lower VIX, which would imply higher on the market, okay? Which is, which also is what gave me conviction for a 418% return. If we look over here, guys, I also tweeted leading stocks because what I do is I like to look at leading stocks for my bias. I said that Apple was not done, was in demand, suggesting higher prices, okay? These are all from my pre-market plans. Okay, Amazon as well. I was looking for a move to 146. So I just could not be bearish in the CPI because we had leading stocks in agreement with my higher time frame analysis on the indexes, and we also had VIX for more confluence. This is the power, guys, of utilizing the higher time frame direction order flow in confluence with leading stocks.